Okay, I'm going to walk through these industry reports, and these industry reports are available through the Catawba website, and we'll go through that in a separate video. But these industry reports can be vital for you, helping you understand both some of the industry issues as well as finding comparative financial ratios for any industry that you're going to study. I'd be hard pressed to think of any industry that is not going to be available in an industry report through our database. So the first you want to look at is you want to identify the industry. We'll talk about that in the other video. You of course want to find one that's recent, and that's, this is not recent. You want to find one within the past 3 or 4 months because these are done every quarter. But for the example, it doesn't really matter what the date is because they're always formatted the same. So when somebody says, I don't know where to find this, the information is always in the same order on these reports from First Research, which is why those are the ones I try to recommend. So as you scroll down through here, you can find a couple things. You're going to find an industry overview. This is where we want to see right here. Hopefully your company is listed right here. So if you're questioning whether or not you're in the right industry, if your company is listed in this area right here, this is a good report for you to use. It goes through some other issues here that might give you some background understanding of the industry. This is a great source to use as you're researching and writing your paper. Here's some issues about international. That's an issue for almost all industries these days. You come down through here. Here's some industry growth rating ideas that might be interesting for you to know about. Quarterly industry updates. Again, some issues that may be challenges or opportunities that may be affecting that industry in the particular short term. Here's some indicators. Here's a forecast. Now, forecasts are important because you need to know how much the industry might be growing over the next period of time. Now, this report was done in 2015. It's got a 4-year forecast. You'll see it's growing at a reasonably good pace. When you look at big industries and big companies, they don't grow at 20 and 30% per year. If they can grow at 4% per year, that's phenomenal growth when you look at the number of dollars involved. Then you've got down here some other things that might fit into your SWOT and your Porter analysis, because these are things down here that affect the company industry. Again, I'm just scrolling through here so you can see how this report is laid out. Again, opportunities might be helpful for you to understand. The executive insights could be a little bit interesting depending upon what industry it is and what's going on. Again, here this tells you a little about the particular officer's jobs and maybe some of their primary responsibilities. We don't need that. As you scroll down through here, what I'm really looking for here is all of this is good. This is about sales. These reports are designed for somebody in sales, so these are questions you might ask if you're in sales. Again, might help give you some insight into the information. What I'm looking for down here is this financial information, and again, this is always the same on all these reports. Now, if it's a couple industries such as banking, the numbers are going to look a little different because banking accounting is a little bit different. Insurance industry is a little bit different as well. But what we're looking for is also we see the quick ratio. Now, hopefully you know what the quick ratio is. If not, that's another set of videos I've posted to help you get familiar with that. And we see down here also we've got all large, medium, and small size companies. So you got to understand whether your company is small, medium, or large in your industry. And you have to do a little digging to find out how your particular company is categorized in your industry in terms of size. But you'll see here there's not a lot of difference between small, medium, large. Sometimes there's quite a bit of difference depending upon it. Working capital turnover is not a ratio we use a lot. Current liabilities and net worth is not one we use a lot, but again, it might give you some ideas in terms of your particular company and their particular financial strength. What I'm really looking for is this area down here, which is company benchmark, which is really industry comparisons. Now, what they've done here is they show it based on percent. Now, that's because as an average company, they can't say, well, the average company has $32 billion in sales. That doesn't necessarily help us directly here. What they're showing here is percentage. So obviously, sales or revenue is always 100% of the income statement. The gross margin average is 69.8%. So for your company, if you start calculating these percentages and compare your percentages to these percentages, that starts to give you your benchmark in terms of how some of these particular numbers line up for your company. Same thing on the balance sheet. Again, they can't give you, say, well, the average company is sitting on $2 billion of cash, because that doesn't tell us anything, especially not between small to large companies. But their percentages tell you a lot. You can see here that large companies sit on less cash than medium-sized companies. For some reason, medium-sized companies have actually quite a bit more cash as a percentage of their overall assets. Same thing with accounts receivable. They carry more accounts receivable. They carry more total current assets by a pretty healthy amount here in this particular industry. So what you want to do is calculate these percentages for your industry to figure out whether your particular company is strong or weak in these different areas. Now there's a couple other issues you can see here that will help you. Sometimes you try to find asset ratios. Well, again, this can tell you an asset ratio because this can tell you current assets in terms of a company to current debts, because here we've got current liabilities. So we see here that you've got 40.2 divided by 21.8. Now if we take 40.2 divided by 21.8, we can see that that's 1.84, which is this current ratio right here. So we can assume that these numbers here are like $100. So if a typical company has $100 and they have $40 in current assets and $21 in current assets, that gives them a current ratio of 1.84. So if you convert these percentages or consider these percentages 100 and $100, you can then calculate a lot of ratios off of these percentages. Now, other percentages are listed right here in this part of this particular report, which is why this is such a valuable report. We actually have a current ratio listed. We have a quick ratio listed. We have now days accounts receivable. Days accounts receivable is not exactly the same as the ratio we're looking at, but it's very, very similar. So that's something for you to figure out what the difference is between those. Here we've got interest coverage. Interest coverage is, again, very similar to the one that we're looking for. Ours is called times interest earned. Very, very similar ratio. Just got to do a couple little conversions and changes to it. Now, these numbers here are pre-tax returns. The reason that these reports show pre-tax is because each company has or could have very different net tax rates depending upon how they're financed and whether they've had carry forward losses. So what you'll be comparing on your financial case analyses is net income after taxes. These are pre-tax return numbers here. Now you could also compare pre-tax return because all of your operating statements will also list pre-tax returns on sales. It'll show pre-tax profits. You can then do pre-tax returns on sales, assets, and net worth. But this gives you an idea of what they are pre-tax. You can then look at that also comparisons post-tax. Just realize that your post-tax numbers will always be smaller unless they have a carry forward loss, in which case your posts might be bigger because they may have an interest or a tax credit still. So these are a very helpful report. They're always formatted the same. Valuation multipliers aren't really something you're going to be interested in. That has to do with if you are particularly looking to sell a company or buy a company. And industry websites, again, may give you some other information in terms of places to look for data, information, issues inside your company or industry. But really get familiar with this financial section here. It can be very, very helpful as you're doing the financial analysis in your companies. And we'll walk through another video in terms of how to find these reports for, as I can imagine, any industry you might need. Thanks.